Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. We just had a rejection of a very strong historical monthly demand and support zone, which was this area here. This zone was already acting as previous demand and support, starting from back here when the market was testing and rejecting the zone to the upside in all these occasions. And right now, what we just had was yet another test of the zone, really deep test of the area, and now a huge rejection to the upside. Now, all this rejection to the upside is coming with strong institutional buying. And we will be speaking about the institutional positioning on EURUSD in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that institutions are currently longing EURUSD on the monthly. It is rejecting a strong historical monthly demand and support zone and drop down on the weekly time frame. Now, from a weekly perspective, what we had was a perfect shift of structure and shift of trend. We went from the creation of weekly lower lows and lower highs, so a clear downtrend, to now the creation of weekly higher highs and higher lows. So essentially we had a perfect transition from a weekly bearish market to now a weekly bullish market. So from the creation of weekly lower lows and lower highs to now the creation of weekly higher highs and higher lows. So at the moment on the weekly, everything looks quite bullish. We can also notice how we're currently getting a rejection away from previous weekly resistance. In fact, from here, both these rejections to the downside were created. Now the market broke above the zone. So this previous weekly resistance is now turned support. The market is testing that zone and has already started rejecting the level to the upside. So here in the weekly, everything looks quite bullish and there is good probability of seeing a potential rejection to the upside away from this area. Now, dropping down on the daily time frame, what do we see? Now, here in the daily, this is where things get quite interesting because we can notice a new break of structure here from a daily perspective. We can notice, in fact, how the market has now broken back above the previous level of daily support, which was turned resistance here. Now, if the market will successfully manage to break and close above this previous resistance will become support. And the market will have shifted from the creation of lower lows and lower highs to now again the creation of higher highs and higher lows. And if that will be the case, so if the market will again here on the daily break structure to the upside, at that point there is a good probability to see a potential retest of this previous level of daily resistance, which at that point would become support. So if the market here will continue to the upside, what we could see? Well, before we dig deeper here on the technical side, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. And let's look at the data precisely for the euro. Now, if we're looking at the data for the euro, we have to keep in mind that we are already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that in the long run, as we have already identified when looking at the monthly time frame, institutions have been longing EURUSD very aggressively. We went from a negative net positioning with minus 64.4k net positions with 230,000 shorts compared to only 165,000 longs to now having a positive net positioning, so more longs than shorts, with 248k longs compared to only 125k shorts. So in the long run, institutions have been moving back to the bullish side for EURUSD. However, in the short term, what we're seeing is a decrease in the net positions. We went from 128k down to 123k net positions. So there is definitely the possibility in the short term to see some short-term weakness of EURUSD and for this market to reverse lower and go and retest this level. Now, another thing that we have to keep in mind is that if we're looking here what is going on from a pattern standpoint, we have a market which is currently forming this W formation. Now, after the creation of a W, what you would expect is for the market to go and complete the W formation in the neckline, so the previous resistance turns support, which means that here on the daily time frame, there is a good probability to see a reversal lower and for the market to go and complete the W formation at the neckline, which also is a retest of this previous daily resistance turned support. So in a situation like this, if this W formation will be created, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see the market reverse lower and complete this W formation at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.